If you're watching this video, you're probably trying to figure out why Tesla stock's getting the axe right now. Why is it going down? Hey everyone, my name is Me Kevin. Well, I go by Me Kevin. And many of you know that Tesla is my biggest holding. I have over 2,400 shares, well, before the split. That means now I have about 12,000 shares of Tesla. So I make it my job to keep an eye on specifically what is going on with Tesla. And why the heck would the stock pull back as big as it did today? At the time of this recording, it is down 4.5% and it's trending downwards. Well, in this video, I'm going to explain what happened at Tesla, what is going on in the stock market, and let's get started. Tesla today announced that it would sell $5 billion worth of shares at market pricing. However, this isn't what caused the price to dive 4.5%. It's something else. But before I talk about that something else, I have to put this axe away. And instead, let's talk first about what this $5 billion actually means, why that's probably not the big deal, and then we'll talk about what the real big deal is. Okay, so when it comes to thinking about Tesla, let's think about Tesla as a pie. After all, pies are owned by people who own these slices of the pie, aka shareholders. However, a corporation usually only offers a portion of their pie up for sale because they gotta maintain control of their pie after all. They decide how much is outstanding. So let's say you have a pie with 100 shares. Let's go ahead and put a pie up here. Let's say 40% or 40 shares are outstanding. That means people can buy and sell those 40 shares. But the company is keeping the right, the other section, to keep 60. That's the blue section. We'll go ahead and call that authorized, but not outstanding, which means the company's allowed to sell more shares if they want, but they like to keep as much of that for themselves as they can. That's the blue section. The green side is basically what the market trades. Those are the slices of the company that we own and, well, play with. In theory, the company can just issue as many shares as they want from the other side of the pie. And the company can do this to raise money so they have more cash in the bank so they can go do stuff like build another gigafactory so we can finally get that Cybertruck faster because I'm tired of my X. That is the Model X. I don't have an X. Anyway, this punishes people who hold the shares because, well, now more shares exist in the green section. It got bigger. So when you have more of something, the share price goes down. This is known as share dilution. And companies don't want to do this often because it upsets existing shareholders. This makes sense. You know, numbers-wise, let's do a quick numbers impact here and try to see what $5 billion should actually do to Tesla's share price. Here, let's say we'll pull up my spreadsheet that I usually like to use for Tesla. And for the end of 2022, let's say I have a price target for Tesla of 2,940. This is using the prices before the split. Those are what's still stuck in my head. So before the split, we got a price target of 2,940 for Tesla at the end of 2022. All right, before the split, we had 185 million slices of pie shares outstanding. Well, now Tesla just added 5 billion worth of shares. So 5 billion divided by about market price of around $2,400 per share, just multiplying the current price by 5. That means Tesla's basically raising about an extra 2 million shares pre-split or 10 million afterwards. Bottom line, I go into my little spreadsheet here. I add the 2 million shares in, boom. My projected price for Tesla at the end of 2022 goes from $2,940 to $2,909. That means Tesla's share price should only fall by 1%. And that's not bad. Tesla has $5 billion more in cash. Their share price should only go down by 1%. So why is Tesla down 4.5% then? What sense does that make? Why is it getting the X? Because this is our money after all. Well, it's very likely the only reason Tesla is down is because of exactly what I warned might happen a few weeks ago when I published my 2 videos on Tesla leading up to the split. And in those videos, I warned twice that it's very possible we're going to see Tesla stock price run up into the split, the day of the split, and then at some point after the split, as soon as there is a little needle that pops the Tesla valuation bubble, fear is going to set in and people are going to sell to realize their gains. Everyone right now has seen, Tesla dropped 1%. The bull run must be over. That's it. Everyone run for the hills. It's over. Fire. Take profits. This is a classic stock market reaction. Nothing has changed at Tesla. Nothing changed before the split, other than the split, which just changes what the appearance of the stock price is. It's nonsense. The only thing that has changed at Tesla in the last month is realistically, I mean, the company's still a great company, but it's realistically that they issued basically more shares, which should affect the stock price by about 1% downwards. But instead, we had this massive, 80% increase in Tesla stock over the last 3 weeks. Now we've got this 5% pullback, which to me, it wouldn't surprise me if we kind of keep seeing this pullback accelerate as people panic because they probably bought in for the wrong reasons in the first place. Because, oh, there's a split. Must mean it's a good investment. No, it doesn't really work that way. Now, I'm going to talk about my price targets for Tesla, but let me just clarify this in one other way. Here, I got this. I made I didn't make a whiteboard, but I drew on this whiteboard that I brought. See, look, Tesla down 4.5%. That's the O face. Like, oh crap, what's happening? That's not good. That should only be down by 1% because of Tesla raising money. It's not a big deal at all. But the market's overreacting, as the market loves to do, because, well, FOMO sets in and the fear of not capturing all these profits sets in, and I gotta take profits to be a successful investor. I gotta pay taxes if I want to be deemed successful in this world, right? It's just a bunch of Fugazi crap, whatever. I'm not selling any of my Tesla shares. And now we've got about a 3.5% decline in Tesla share price on top of that 1% decline, thanks to what I call trend reversal, aka fear. Which the cool thing about fear is where Kevo comes in. Kevo comes in when there's fear. Now, we may as well quickly mention my price targets. So my 2022 price target for Tesla, which I think potentially is a little on the low side, but my 2022 target for Tesla is somewhere based on the new pricing around $581. $581. That's just dividing my targets by 5. Now, for the end of 2024, the targets can get a little bit more wild, mostly because we're projecting out for so long. But really, 2024, it would not be a surprise for Tesla shares to be somewhere in the neighborhood with this post-split pricing of $700 to $1,000 bucks. $700 to $1,000. There, something like that. Okay, perfect. So those are my price targets for Tesla. So what am I doing now? Now, obviously, no guarantees as to what's going to happen in the stock market. Just because I expected some kind of pullback after the split doesn't mean that tomorrow can't be a big green day. Though it wouldn't surprise me if Tesla continues to trend down over the next month, because honestly, it got blown up way too high. But hey, you know what? I'm not selling, even though I see that coming. Instead, I'm taking the opportunity to buy. So every day Tesla trickles down in this trend, expect me to keep buying in, to average on in. Thanks so much for watching. Consider subscribing if you like this kind of perspective, and folks, we'll see you next time.